Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back. Now let's have a look on the gold market. Actually, guys, for the truth's sake, on the gold market we have a similar picture, very similar to euro currency. The same minor consolidation, same type of the performance on the intraday charts, and the same targets of the same patterns. Actually, very well, almost the mirror situation as on euro currency. So it's not a surprise, or better to say, not a secret, that recent performance, especially volatility on the United States dollar, and as you can see, volatility on the Forex, on the gold, stands due to the piking between Elon Musk and Donald Trump. So this conflict already is turning to the public space. You could see lots of past tweets, and so it's difficult to say what is going on actually with that. I even do not want to dig this, and I'm not really very interested with that. Maybe it's another attempt to manipulate the market to just grab and get the great positions on cryptocurrencies after the big collapse, when they somehow surprisingly will come to agreement once again and market will reverse. So Donald Trump already has shown a lot of manipulation, especially on the cryptocurrencies, because he can't do this on the stock market. It is because it's actually could be treated as a crime based on regulation of the stock market, which is significantly more detailed and more strict on the cryptocurrencies. But he easily could do this on the cryptocurrencies. Not necessarily it has to do this personally. It could do this for the funds, for some third people, or some other way. But it really could happen. I don't know. It doesn't matter actually. What really matters is that the recent performance on the gold market mostly was due to this event as well. And currently market is coming back to the levels where it was standing previously. So it means that in the current situation, based on the intraday picture, I would prefer to wait and see what will happen, because we already have taken long positions on the major points. We have good positions with the break-even stops. We know the target stands at 34.40. So we are gradually and regularly taking some profit on the market with this upward action. But for now, since today is Friday, we are standing at the eve of the payrolls report. Maybe payrolls will be poor, but question is whether it will be poor enough to push gold market to the new top. This is another concern. So I would say if you have a long position, you could, for instance, take the part of it. I mean, close it at some part, 50%, 60%, 70%, don't know, it's by your choice, and keep the rest for the tricks around the payrolls. Who knows? It's just some kind of the wild card here. What will happen? Although, because overall context is bullish, and maybe today market will decide to show the spike and taking out the top, completing the target. This also might be the case. But if you do not have the long position here, that's maybe really big challenge to take the new one here, and I call you to think twice to make decision. Maybe this will be not a good decision. On the following time frame chart, here is what we actually have. In fact, market keeps standing in this range. Previously it was looking like the triangle, but the recent upward action now stands looking more on a flag. And with this downward action on a May city, the bullish dynamic pressure that we have identified recently still exists. So this bullish factor still stands in place, but it's difficult to say at what point it will be triggered. This is first moment. A second moment, which is also we have to take into consideration, that if we recall recent triangle and the bullish dynamic pressure that we talked about, it is partially already completed, because the minimum target of the bullish dynamic pressure is taken out of the previous top, and that's particularly what has happened recently. Now market has to start building energy once again, accumulating it for possible upward action, and could take the time. And it is difficult to say how the payrolls will impact on this particular process. So in this scenario, I wouldn't say that this combination of the flag and rising possible dynamic pressure with the bearish emissivity, it's a strong enough context to make the final decision on the long entry right here. So this it is looking nice, but it is not enough, to, at least personally for me, to take the new long. So on the hourly chart, here as you can see the performance that we've got. With this upper direction, you could see that market barely hasn't reached the target, so we could say that mostly 34 has been done. This 127 extension on the butterfly has been done, but not quite. And I'm not speaking about the XOP. XOP has not been reached at all. So here still some distance exists. Then collapse follows right to the confluence area. This performance, well, it's probably also can be treated as something absolutely stunning and superb. This is not like here, right? So and all this combination doesn't exclude the scenario with a possible deeper retracement back to the 3305, for example. It's easily might happen. So taking it all together, what I would like to say is that currently risk-reward ratio to the XOP with placing stop somewhere below this confluence, maybe it has some positive ratio, but not too strong. Besides, we do not have any clear bullish patterns right now on the back. So with these perspectives, I would prefer to wait and see what will happen and not take the position today, new position today. For others, if you have long positions, your stops at least somewhere at the break-even, or maybe even tied it right to this level. It also might be. In this case, you could, for example, as I said, could split your position, take the part of the profit, and if you would like to, you could keep the rest for tricks and games around the payrolls report today. Maybe this will work. Sometimes it might be a really stunning results if payrolls will be really bad. This also could happen. But based on the current technical picture, I do not see something really extraordinary bullish, and that makes me to think about position taking right now. So that's our view currently on the gold market. Let's see what will happen today.